Well, basically, global share prices were discounted by 10% between late July and early August to account for the sudden reappearance of sovereign risk caused by the failure of European leaders to agree on a credible cooperative plan at their summit on July the 21st. After the initial 10% adjustment, all financial markets have been incredibly volatile as investors respond to the furious debate about whether Greece will default or leave the Eurozone, whether monetary union will survive, and in particular, which of Europe's banks will survive. As this next chart shows, the banks themselves aren't sure. It shows the interbank lending rate for Europe and the United States, with July 21st marked in. That's when the chill went down bankers' spines and they realised that maybe politicians will stuff things up and allow Greece to default, and they started to jack up interest rates that they charge each other because no one really knows which bank is effectively insolvent. Last night was a relatively good session in Europe, but there's no sign of a trend yet. The daily moves are large, but for 6 weeks they've been reversed the following day. Wall Street fell last night, but the Chinese share market jumped sharply today. And the Australian market went up 0.7%. Here are some of the biggest moves. Telstra more than 1%, CSL 4.5%, Macquarie 3%, and Commonwealth Bank fell 1%. Precious metals recovered overnight, with gold back above $1,800 an ounce and silver up 2.5%. Oil also went up. And the Australian dollar is also back to where it was in early August against the US dollar, although against the euro, not surprisingly, it's 3 cents higher than it was then because the euro has been sold off. And that's finance.